excessive treatments and visits. If they want you to spend $100 just to check in and see how you're doing, tell them you'll come in if you haven't improved. Otherwise, you're going to leave that spot open for someone who is in higher need. Do this a few times a year and you will have saved a lot of money. Now, again, don't jeopardize your health, but be proactive in these things. Some of these routine follow-up visits are just them making money. Do they care? Well, probably yes, they probably do. But they're also making sure that their calendar is full of people that have good insurance to pay. I don't know how much of that you want to participate in, but if you whittle it down a little bit, you'll save quite a bit. Now, I also told every person who got a policy from me this year that knowing the difference between a need to call the nurse hotline, visit the virtual medical care if offered, a need to be seen, a need to go to urgent care, or a true need for the emergency room is a requirement. You must know the difference. Going to the emergency room thinking that you're going to be seen faster or get better care, you could conceivably be wasting time and money. The fastest care is the nurse hotline. The second fastest care is urgent care. Both of these are very reasonably priced. Most plans, the nurse hotline is free. Urgent care, probably a $40 to $60 copay, which is way less than the emergency room. And the consistent care of your primary care doctor is fabulous. But sometimes when you've got something really bad going on, like an overnight fever spike and a sore throat, you need something a little bit quicker than an appointment in 3 or 4 or 5 days. This is when you call the nurse hotline and see if you need to run over to urgent care and get a strep throat test. Now remember, but if you're in critical condition, these are emergency room things. Heart attacks, strokes, comas, compound fractures, diabetic coma, those things. Then, of course, the ER is the only place for you. Don't hesitate. Get your little self there. But knowing when to do each one can save you thousands of dollars per year. It also frees up resources in the emergency room for them to treat the people that truly are having an emergency. That's nice for everybody. Now, next, nearly every insurance carrier will charge you for an ambulance ride. And an air ambulance ride is thousands of dollars. So call for an ambulance when one is absolutely needed. But if you can get there on your own or someone can get you there, that's a way to save a lot of money. Again, if you need that ambulance, don't hesitate. Now, to save on the cost of copays, deductibles, and other big bills, you have the option to pursue the following types of insurance. Hospital indemnity insurance pays the cost of the daily hospital copay, part of the ambulance copay, and or a lump sum upon hospitalization. And many of these plans are absolutely amazingly affordable. Like they start around $30 a month and they go up from there. That's a really good way to hedge the risk of your hospital copay or deductible. A critical illness and first diagnosis policy will provide to you a lump sum upon the diagnosis of a major illness. And again, these plans are surprisingly affordable. I think many people don't look into them because they think that they're really expensive, when in fact, they're really not that expensive. And depending on the carrier and what you qualify for, the lump sum ranges from $2,500 to $50,000, depending on what you bought and, again, what you qualify for. Now, if you're really budget-minded, You could pay for your average everyday care out of pocket and save that $22,000 to $25,000 of premium plus deductible for our family of four we started out with at the beginning of the show, remember? For this care. Then you could buy the less expensive critical care policy and hospital indemnity policy to mitigate the risk. You could save thousands of dollars per year and put it towards your retirement savings account, unless, of course, you have a chronic illness. In that case, that's not a good plan for you. So remember, we have to personalize the plan for you. Now, if you're budget minded and you don't have 24 months of income in your savings account, you are going to need to buy what's called long-term disability insurance. 24 months of income in your savings account would replace your income for up to 24 months in the event of an accident or illness. Now, since 75% of the people do not have over $500 in savings, that tells me that 75% of the people don't have anywhere near 24 months of savings. What if they were one of the 4 in 10 people who had a severe enough illness or accident that they missed at least a year of work? What would they do? They would be so broke. So in my opinion, the most important insurance that you can buy, I know the life insurance people are going to shoot me, but the most important insurance you can buy is long-term disability insurance. This insurance replaces your income for up to 24 months in the event of an accident or illness. That is a big deal, a very big deal. Does it replace all of your take-home money? No, they're not built that way. But it does replace like 85% of it, because they assume that since you're not going to work, you are going to have some expenses that you no longer have, like gas in the car and lunches out, dry cleaning, stuff like that. And this money is coming to you tax-free, so you should end up barely well even with the board. Yeah, you're going to have to cut a few luxuries, but you'd be all right. You wouldn't be going bankrupt, is what I'm saying. So this insurance is very, very important to you. So if you can cut some of that $22,000 a year on traditional health insurance premiums and deductibles and invest in long-term disability insurance, this is a good thing for you and your family. Okay, I heard that. Who said it? Of course you need this. What do you mean? Even if you have short-term disability at your employer, there's 2 problems here. That only works if you're still employed, and it only covers 6 months. After about 12 weeks of being disabled or so sick you just can't get to work, they can and they will end your employment, and then there goes your income replacing benefit right along with your job. And then what do you do? Social Security disability does not kick in until the 25th month after the disability occurs. And that's why the long-term disability covers 24 months, because in the 25th month, you'll pick up your Social Security. Now, Social Security does kick in sooner for terminal diagnoses, by the way, so don't despair if that is some bad news that you're getting. But again, 4 out of 10 people find themselves in this topsy-turvy boat in their working lifetime. Don't wait until it's too late. Get your long-term disability insurance on your own. You own it, you control it, you choose it while you qualify. And I want you to know your options so that you can make an informed choice. Some of the options we're discussing during this show and what we're going to discuss in part 2 may not actually be for you. You have to pick and choose which ones are best for you. And if you need help picking or choosing, you just let me know. Give me a call, send me an email, and we'll help you pick and choose based on your individual situation. Not every single thing is right for every single person. And of course, you don't want to be insurance poor where you're spending so much money on insurance premiums that you don't have any money left to do anything else. All right? But you need to prepare yourself for your best life and be who you are and do it well. You cannot do that if you're going to go with the flow and buy everything the corporate giants are peddling. You know, they didn't get to be corporate giants without being great salespeople, relying on impactful marketing campaigns. Now, in the next section of this show, we're going to continue talking about some of the options that you have in order to pare down your costs of health care and health insurance. And for most people, I saw a statistic recently, I don't know if I remember it exactly, but most people are spending more on health insurance and health care than they are on housing and food. I think that's backwards or upside down or sideways. You pick whichever term you like. Messed up. Pick one. Stick with it. It doesn't matter which one you pick. It's all of it. So I want you to know that you can do this. You can make the right choice for you anytime you want to make it. And as you know, I will be here to help you with it. So until the next time, when we get to part 2, when we finish this snarky discussion, and we were a little snarky, weren't we? We were kind of hard on the healthcare profession. But until next time, remember what I always tell you. Be grateful, and you will attract good things. I'm Ronda Cobb, the Money Coach, and don't forget to look at the new website. Give us feedback. Thanks. Till next time.